What is going on, everybody? And in this video, I'm giving you a state of the market and some stock picks for February 11th, 2022. So if that sounds like something you're interested in and you're looking for daily updates as well as weekly updates to get you prepared for the following day and the following week ahead, remember to subscribe. So everybody, state of the market. What are we looking at here? Going into today, I talked about how we needed to break above the daily on the SPX. It was important, but we still know that there were some major events essentially to happen next week. We knew Powell was going to make an appearance next week in front of the Senate. We know that the FOMC meeting notes are next week. But more importantly, we had the core CPI come out today. And that in itself was absolutely horrible. It's a 40-year high on inflation. We essentially beat what was expected by a large margin. So being said, the market reacted very strangely. It took me by surprise. I mean, the market has been doing so many weird things lately that nothing should really be a surprise at this point, because the Fed is so entangled with this essentially fight against inflation that it is driving the market every which way. Then you have other Fed members that are essentially just dropping their opinion left or right, whether they hold a vote or not, and that is driving the market up and down, and why we are getting so many wicks. So being said, inflation extremely bad. We actually came out this morning. Which was quite interesting this morning. We came out this morning and we started to sell. I mean, we gapped down, we started selling, essentially retested that 50 on the daily and just got rejected ultimately this morning. And then we popped right back up. Which was really interesting in my mind. I didn't know why we were pushing so hard. In my mind, that was just bullish in general. I thought we were actually going to reverse and we were just going to keep going because we're kind of at that point where we needed to break to get going. As you can see, we were at that make or break point, essentially at that 45.60 mark. If we could have broke that, we could have definitely opened it wide up and continued to run. The market just wouldn't have cared about what was currently going on. Nothing changed. Everything was the same. The market was getting numb to what was going on. Even with the inflation data being as bad as it was. But then come out later and Fed Bullard came out, which he is normally very dovish on the market. He is normally again, on the far spectrum of everything. He is very conservative on everything as far as rate raises and anything like that. And then he came out and just started talking. He started getting very hawkish, especially with the numbers that are coming out. Being said, the market just lost it after that point, and we just dived. End of day, we took our midday, I should say. We started to dive, and then we just continued to sell off. Now the question is, going into close today, we had AFRM for earnings. They leaked their earnings. They missed expectations, and they dove really hard today, which I was actually expecting them to do really good. But AFRM pretty much died today. So, but going back to the general markets, it'd be interesting to see where we go. I actually wasn't expecting us to break out of this consolidation zone yesterday, to be honest. I thought we would have chopped around here more actually going into next week, but we broke it. Now we're back into the zone. I'm actually expecting a retest here tomorrow if we're not down here at this 44, essentially close to that 4,400 mark is the bottom of this range here. If we break this, we're in, I think, deeper trouble. But then there's rumors about emergency rate raises again because of the massive amount of inflation that's going on right now. Again, it could possibly be entailed with Powell not taking action. We have to see, again, Powell. Bullard was essentially talking about July and March. Essentially, something has to be done in March and July. So maybe it's an overreaction from the market. We kind of already knew that something needed to be done in March. A lot of the Fed futures were essentially pointing towards March. So we have to really see what's going to happen. But the point is the market is essentially stuck between the Fed and what is going on in inflation. Is it going to be corrected? Whatnot? Is it transitory? It's obvious the numbers today are obviously showing it's not. It's getting out of control. The Fed shouldn't let it get out of control. But the problem is they do an emergency. If this rumor is true, again, it is a rumor. If there is emergency rate raises, something I talked about, if they happen to do this, it is going to crater the market. Even with that padding that we've had already with a 12% correction, coming this soon, this quick, it would crater the market. We could drop another 5-10% from where we're currently at because of, again, runaway inflation and possibly Powell realizing that and try to do something. So I don't think he would, at this point, it's hard to say. I think it's too close for him. If those rumors are true, I think it could hurt the market a lot. But I expected everything I have essentially been thinking going forward is essentially been moved up a lot faster than I thought it would. So we're just going to have to see. I didn't actually, again, think we would break out because we had Powell and the notes next week. But again, I don't think that's going to hold as much weight as March will. March is obviously going to be the really important date because that's when the next FOMC meeting is, since when Powell actually talks and addresses about what their changes will be. So will the Fed wait that long, or will we get something? If we get something beforehand, you can consider the market to correct even more from that point. But again, the Fed also knows that if they do have some kind of emergency rate raise, how dramatic that would affect the market. But it really just needs to, at this point, the Fed just needs to rip the Band-Aid off and do something, actually take action, or else the market will continue to be super volatile, continue to have, essentially, the market is a penny stock at this point. We are pumping and dumping left and right. No technicals are playing out. Fundamentals, you don't even have fundamentals because, again, the Fed members don't know what they're doing at this point. So there's just a lot of fear and volatility. But again, we're seeing signs of strength in the market. Like the market wants to keep going up, and then we keep getting dropped with this information about the Fed and emergency rate raises. And again, one of your most dovish members of the Fed with voting rights is essentially coming out and saying he's getting more hawkish. So it's interesting to see because he's also fluctuated back and forth between 7 and now 3 and 2, and now he's saying something needs to be done even sooner. So it's nobody knows, but we will be guided by the Fed. So going into tomorrow, Bitcoin, like I said, it's still holding well. I'm not really concerned about Bitcoin. Again, I think for an inflation hedge, Bitcoin is actually going to do well in this environment. What we'll have to see, again, it's holding up at that 45 mark. I think it will do really good moving forward. And again, with all the latest technology and everything going on, I think innovation and everything will help propel Bitcoin even further, just blockchain in general. So it's not so much Bitcoin itself, but the technology behind it that will propel it moving forward from this point. And then for those people that aren't that aware of crypto, I think it's going to be an inflation hedge, essentially being the digital gold. So as far as tomorrow, I think the biggest ones is to start looking again at the biggest leaders and the ones that have done really well for earnings already. Essentially, all the really, really big companies have already reported. So your Google, your Tesla, your Apple, Microsoft, even though it reported good, is still doing really bad. Amazon still hurting there, right? It's still doing really good, but it's been struggling to break out or do anything. The whole market's been struggling to break out to really do much because of the fact of what the Fed's doing. Chips have been absolutely dominant going into tomorrow. So what I'm actually looking for is a dip. I could give you key levels, but I'm actually kind of thinking that we might actually gap down overnight. If we do gap down, like for NVIDIA, I would start looking at the 240 mark. Will we gap down that much? I'm not really sure. I don't know how people are going to take this inflation. You're going to get digestion of what just happened today. A lot took place today. So something I talk about all the time, when something new takes place, that it's going to, the market will digest it, and then you'll get more of a reaction overnight. And so depending where this lands, the 200 is sitting at the 231 mark. I think that would be a great entry for at least a solid bounce for NVIDIA. Qualcomm is definitely one I want to watch. Its 200 mark is sitting at the 157 mark. Do I expect it to gap down that far? I don't know if it'll make it that far tomorrow in an overnight gap down, but we could come very close. I think in a day, if things get really bad and we break some key levels tomorrow, I think it could get really bad and we could sell off pretty hard going into next week, especially with really bad inflation numbers. Again, not really sure why we pushed. The market was just going to be numb about it and just continue to push forward. But we'll have to see. Google, you have to be careful because once it starts sliding, it slides pretty quick. But we do have a support at the 2651. And yes, Google, I can actually see this gap down here tomorrow and hold that. So we do have the 50 weekly support at the 2559 mark. So that's one I want to watch tomorrow. Again, I'm looking for a bounce. If we gap down really bad tonight, I'm looking for a really solid, sharp bounce in the morning. Essentially look to possibly take puts after that. So essentially calls the puts first thing in the morning. I have to see. Tesla is one of those ones as well. I think if it gaps down, you're looking, your first support here is at the 877 mark. You should get a nice pump out of that first to get a retest again of the 900. And then if it does, that does not hold, you can expect it to pull back down. Again, your 200 is sitting at 856 mark. I'm not really sure if Tesla will go down that far. It really just depends on the market in general. If the market in general starts to really sell, then we could be in some trouble. The banks were at a key level, especially on the daily. This is something to keep in mind. If the banks start to go, we're going to be in trouble. We've kind of topped out with the banks here. They normally do really good on inflation, though. So the banks could actually continue to run. But if the banks do give out and do give a retest, especially like Bank of America here, if they go back down to $47, that's enough for a nice gap down tomorrow and then possibly push up again. GS, Goldman Sachs, bad spots. It's kind of pinned between the 200 and essentially that 377 mark. So if this gaps down below the 200, that is definitely not a good sign. JPM, same situation, just like Goldman Sachs. BA is holding. I have to see value in banks typically do, financials typically do really good when they typically do really good when big tech starts to sell with inflation and stuff like that. People are attracted more to the value and to just banks in general, the financials. So we have to see how it plays out tomorrow. Again, I would ultimately stay with chips and big tech. Airbnb actually has been doing really well, holding up. Airbnb, I'm looking for that 165 mark tomorrow. I think this one has done really well considering everything that's going on. So if we get a tag back at the 165, I think that would be, as long as it holds there, it'd be a good entry. Again, we could break that. You got the 200 on the daily. There's your 200 support on the daily. So I think we get a nice tag back on this tomorrow. If the market doesn't hold, again, if it breaks this, then I think the market's in a lot deeper trouble. You definitely want to keep an eye on Amazon. Amazon, again, really bad spots. It broke back down below the 50, retested today. Can see that back at 30.98. Could get a bounce there. Shop has just been struggling. There's no point really talking about Shop. Coin, if it does hold 206 mark, could be good. It could be a retest. Again, this could be a good entry tomorrow. Again, I talked about Bitcoin. If Bitcoin does hold and continue to push, the market holds tomorrow. Again, good inflation hedge. And Coin's got earnings towards the end of the month. They also got the announcement of their NFTs coming up as well. So you can buy, sell, and create NFTs on their site. Since Coin has kind of been the gateway for people in the crypto, they'll also get people on NFTs. So I think that will help the company in general surge. So being said, again, I don't want to make this video too long. Those are very long. I know there's a lot of state of the market, but there is a lot going on right now. I was trying to give some understanding of what the market is up to, what it's doing. Understand it is the market is definitely in the hands of the Fed. And the Fed aren't really sure what or how to take the current situation. It is a historical period, so they're dealing with a lot of different hurdles, nonetheless. So that being said, if you made it this far, remember to drop the like button. And until next time, I'll see you guys later.